Welcome to the Legacy Syndicate Podcast.
That's what people are feeling right now.
It made me sick to my
People
stomach.
are feeling that right now.
And knowing that they've been inside of a 401k, IRA, thrift savings plan, 457 deferred comp, 403b, knowing that they've been working for 5, 10, 15, 20 years, putting all their life savings in it because somebody told them it was a good plan, and they're sticking all their money in it, and then when the market drops, they're losing it. And
I had a client almost 6 months ago say, I'm going to wait a little while. I'm going to see what the market does. I'm going to see if my money picks back up, if I gain any more value. He came back to me just a couple days ago. He said, Mark, I don't know why I didn't listen to you in the beginning. I got to move my money right now. And so we set him up with a small rollover and plus a couple other things. But people want to see if their money's going to gain back, and it doesn't most times, you know.
So it's not saying that 401ks are bad.
Right.
Bad because anybody, and this is for me to tell you 100% transparency, if anybody talks trash about another company or another product to make their product sound better, run as fast as you can away from them because they're giving you what was it, false hope. Okay, and they're trying to use fear tactics to give you fear, uncertainty, and doubt about your current plan. But there's different strokes for different folks, and first you got to find what you're solving for, guys. What are you solving? Are you solving for guaranteed income for life? Are you solving for liquidity? Are you solving for better rate of returns? Are you solving to minimize the taxes that you're going to have to pay 20 years ago that we all agreed that taxes are going to be higher? Now, what are you solving for? Once you're able to find out what you're solving for, then you check out the different products and say, okay, which product is going to help me meet my needs and my goals, right? We hear about diversified portfolios. Now, diversified portfolios is not just you have all your money in one product and just diversify all the stocks inside of it. I mean, you're still at risk.
You're still in a variable product.
That's what we hear more the majority of the time from financial advisors. But diversified portfolios also means two other different types of diversified things. Diversified asset classes, a little bit in securities, a little bit in life insurance, a little bit in crypto, a little bit in gold and silver, maybe some real estate. You're diversified. That's a diversified asset portfolio. But then you have diversified taxes. So you have tax now, you have tax later, and then you have tax never.
Okay.
You want to shed some light on the different things on the 3 tax buckets?
Yeah. So tax now obviously would be your deferred comp, your 401ks, 457s, 529s, all those traditional retirements where you're paying the taxes. You're not paying the taxes right now
on the seed.
You're paying the taxes on the harvest. You're not paying the taxes on the seed, right? So then you have the tax. Did I get that backwards? I got that backwards.
Yeah. So you got tax now.
Tax now would be the
banks, money
market accounts. Taxed later would be the deferred comps, 401ks, because you're going to pay taxes on the harvest, and then tax advantage would be products like life insurance, Roth, IRAs,
and municipal bonds.
Yeah, municipal bonds. Yeah.
So
you just got to decide what bucket you want to put most of your assets into, right?
Yeah. So the goal is to get as much of your money from tax now and tax later into the tax never bucket at retirement.
Yeah.
But we've always heard about the same, but I'm going to be in a lower tax bracket, Mark, when I do retire.
You hope you will.
Well, we sit with our clients, and many of them are already retired, and they're not in a lower tax bracket. And the reason why, guys, is because think about this: your 2 biggest assets as a W-2 employee. I'm not talking about business owners. As a W-2 employee, your biggest tax deductions right now are your kids and your home. So in 30 years, when you go to retire, hopefully the home is going to be paid off, and your kids are going to be old enough; they're going to have already moved out, right? So you're losing your 2 biggest tax deductions. And here's the other craziest thing ever, man. We know that when you go to pull Social Security, if you pull out over $34,000, now your Social Security is taxed upwards of 85%.
Right.
So they say he or she that controls your money controls you and the decisions that you make in your life. I hope to God I never have to use Social Security because that means I didn't save enough or compound enough or multiply enough to live my best life. That means I'm still financially dependent on the government. And anybody I've ever seen who's dependent upon the government for their livelihood, it doesn't work out in their best interest.
But think about that for a second. Let's pick that apart for a second. So the government wants you to pay less taxes when you're older, but they want you to be in a lower tax bracket, which means you have to make less money,
Correct.
which means they want to ultimately keep you poor.
Mm-hmm.
They want the older generation to be poor. They don't want them to live in abundance, because if they lived in abundance, they get taxed at a higher rate. So really what they're telling you is make money while you can, because when you're older, we want you to live by the the string of your teeth. We want you to live paycheck, not paycheck to paycheck, but hand to hand, in what you're bringing in as far as retirement income. They want you to be poor. It's the craziest thought. If you really think about it, go down that rabbit hole.
Well, what would happen
The system wants you to be poor.
What would happen if let's say instead of 79% of middle class America living paycheck to paycheck, let's say 79% of middle class America lived in an abundance of wealth and money. Yeah. What would that do to the government?
It would put them out of business.
It would put the government out of business, and we wouldn't need the government.
We wouldn't
need them. Does that make sense? They don't want that.
No.
So they stick us in this education system that teaches us how to be good employees, because we're a cash flow asset to the U.S. government. We're tax-paying citizens. The more money we make, the more that's taxed, right?
So I actually heard a story real quick. It's in my mind, of a very rich and wealthy king, one of the wealthiest kings in history. I forget his name, but he gave back to his community. He gave back to the citizens in gold. And because he made his community so wealthy and so rich, they bankrupted the government. The government was not needed at that point anymore. So that's just kind of like a foreshadow. Imagine if we gave back to all the people and they knew how to properly manage their money, right? So that's a big deal too.
Sure.
You can give people money, but that money is going to end up going to the top 5% if you don't know how to manage your money. But if we give people money, but we also give them the tools and the mentality to be able to manage that money properly, we would be putting the government out of business and making our society just healthier in all ways possible.
Absolutely. They say if you took all the money in the world and divided it evenly amongst all the citizens, within 5 years it would turn back to the same hands.
Yeah. Bad money skills. Bad money management.
So they take financial literacy out of the school system. It's crazy. Now we're 20, 30, 40 years old. We're making money. We don't know how to save it or spend it.
Yeah.
And when we do increase our income, it doesn't mean we increase the amount that we save or compound it. It means that we increase our lifestyle.
Yeah, it's true.
So there's a problem.
Yep.
And that's what we're here to solve. That's our mission and crusade, because there's a war going on in America. Forget what's happening in Russia and Ukraine. I pray for them. But what's happening in America is the poverty war, guys. And we got to stand up. We're looking for leaders to stand up, to rise up, to be vocal, to learn this knowledge, to go out there and educate the communities and be that pillar and that beacon of hope for a better tomorrow, to let you know that you live in America, the land of opportunity, that you were born to win and succeed, and you got the DNA of a king running through your blood, guys. You weren't put here just to survive, Mark.
We were not put here just to work.
No.
Man, think about it.
One thing I know about God, and I know you got a pastoral background, and tell me if I'm wrong, please correct me if I'm wrong, but God does not bless mediocrity. He blesses abundance and excellence.
Sure.
And I tell you guys, if you're looking for change, I want to let you know it doesn't matter what the people around you are telling you. You are meant for greatness, guys. So if that's the first time you heard that, go ahead and let me know in the chat. We want to be able to serve you guys. We want to be able to help educate you and get you to the next best version of yourself. But there's something as we start to begin to end the segue. We're in the financial industry.
Yep.
We get a lot of messages and phone calls and questions about properly structured life insurance policies. And then we meet with clients who already have life insurance, but we're looking at them and reviewing them, and they're improperly structured. And we're like,
they're a mess.
What happened here?
Yeah.
So, guys, we got a good for you today, okay? Where we're going to tell you.
Get your notepads out.
Where we're going to tell you 14 questions that you should be asking that life insurance agent, that financial advisor, and they should be able to answer them just like this on the cuff, not researching it, not looking it up. If they can't answer these 14 questions we're about to give to you, you need to run and go find somebody else that can answer these 14 questions.
Not all financial advisors are created equal, and neither are life insurance brokers. They're not all created equal. And most of them are just mediocre.
Yes.
Most of them are mediocre unless you meet with a specialist that deals with properly structured policies and well-designed portfolios. You're going to be gambling with your money.
Yes, absolutely.
So what are some of those questions?
So we'll start on The first question is, what is TEFRA, TAMRA, and DEFRA, and how do they impact my policy? What is TEFRA, TAMRA, and DEFRA, and how do they impact my policy? That's question number one. Number two is explain to me Internal Revenue Code 72E, 7702, and Internal Revenue Code 101A. If they can say, oh, I got to look that up, run. They don't know. They should know that, especially if they're practicing it and that's their profession. What's some other questions?
Yeah, what is a guideline premium? Guideline single premium. Number four would be, what factors will the insurance company consider when gauging the size of my policy besides the guideline single premium? So these are technical questions, but these are questions that you should know to ask them, because if they can give you an answer without even thinking about it, they know what they're talking about.
That's it.
And maybe we can do a podcast where we cover some of these kind of like question and answers as well.
We'll answer some of them as well. So number five, what size policy would someone have on average who is healthy, 60-year-old male, with a GSP, which is guideline single premium, of 500,000. If they can't answer that, that means they have to have done enough of these. So if you have a 500,000 guideline single premium, that automatically means you're going to have about a $250,000 minimum death benefit. They should be able to answer that question, especially if they specialize in this industry. Okay. Number six, what are the rules for perfecting a modified endowment contract?
Yep. Number seven is, how can an insurance company earning 5% on their general account portfolio afford to credit you 7 or 8%? That's a question I get a lot. How can this company give me this when they're making this? And so you should be able to answer that pretty quickly.
Absolutely. I'll just say arbitrage.
Yeah,
okay?
Exactly.
But anyway, now they got to be able to explain what is arbitrage, right? Where question number 8. How can policyholders experience 1 to 2% higher payouts than the average index they are linked to? Because remember, the indexing strategy is just a strategy. It's not an index fund, because the index fund is just a low-cost mutual fund. An index strategy is just your money is linked to an index, S&P 500, the Barclays, the Credit Suisse. So when the index goes up 10%, you're going to profit 10%. But if it drops 10%, you have a 0% floor. You never lose. So I'll repeat the question to you. How can policyholders experience 1 to 2% higher payouts than the average index that they're linked to?
Yep. Who runs your policy illustration?
Number 9.
Number 10, if I max fund the laser fund or an IUL, an index universal life insurance policy, over the life of the policy, what is the expected net internal rate of return likely going to be compared to the gross rate of return? So they need to know what the internal rate of return versus the gross rate of return is going to be.
That's a significant question that has to be answered.
Sure.
Number 11, how long have you been structuring these types of policies?
That's an easy question to ask.
That's an easy question.
If they say a couple months, you may not want to work with them.
but that's a must-ask question right there. Right? I mean, it's like,
how often do you structure these types of policies?
How often? Yeah.
Because I could have structured one 2 years ago and said, "Oh, I've been doing this for 2 years," right?
So that means you're still a little rusty.
Yeah, exactly.
Okay, cool.
Yeah.
Number 12. Do you specialize in maximum funding, index universal life policies, or do you handle all kinds of insurance, guys? I'll always say this to my clients.
That means homeowner, renters,
property casualty.
Are you like a progressive, right?
And we can just add some life insurance in there as well, right?
Yeah.
So, and the reason why it's a red flag if they handle all types of life insurance is because they don't specialize in one. They're jacks of all trades, and they may not be sharp. Their tool might be a little rusty, and they might make a mistake on yours and improperly structure it. Another thing like this, do you specialize in it? Because if they work with a captive agent, captive agency, State Farm, Allstate, Nationwide, even though they offer the product, right, it doesn't mean it's the best type of product. You can have the right product, but the wrong company.
Or the wrong training.
Or the wrong training.
I've had State Farm agents reach out to me asking me to train them on how to structure IULs, and they're like, well, they don't give us the proper training. They don't tell us how to do this. We have to figure it out on our own. That's dangerous right there.
Yep.
And also, when you're talking about, are they specialists? You know, that's the saying, oh, I'm a jack of all trades, master of none. You don't want to work with a jack of all trades. You want to work with a master of one. You want to work with a specialist.
Yep, absolutely. So we have a lot of people ask us, how can we get started in business with you? And do we specialize in other types of insurance? And we say, no, we do not. We're not the jack of all trades. We specialize in life insurance and retirement planning.
Yep.
We don't do property and casualty or anything like that. We want to be the specialist, okay? Not the insurance agent, okay?
And that brings us to question 13. How many insurance companies do you represent? You know, if they're only representing one, they're a captive agent. They can only sell their brand of insurance. That means they may not be putting you in the best interest possible.
That's it. It may not be in your best interest, guys, right? So, and number 14, we'll wrap it up with this. Is insurance your sole profession, or is it a part-time endeavor? Is it something they do all the time or just some of the time?
Yeah.
Right.
Yeah, that's good stuff, guys.
So that's important to know is, and if they are part-time, that's okay. It's okay. They may be learning, but just make sure somebody is there that does it full-time.
Yeah.
That they can learn from this, making sure that it's properly structured, engineered, and designed, my friends.
Yeah. And if you have other questions, let us know in the comments. Drop a couple questions in the comments. Some questions that you want us to cover in prior, future episodes. But I got one question for you as we wrap this up. Has the life insurance industry really changed over the last 30 years? What do you think?
It hasn't grown.
Do you think people have gained trust or lost trust over the last 30 to 50 years?
With modern technology, I think they lost trust. And the reason I feel they lost trust is because a couple of different reasons. Bad word associations.
Okay.
People like to buy and spend money. Obviously, 79% of middle-class Americans live in paycheck to paycheck, but they don't like to be sold. And I used to have a problem with the word sales. I had a bad word association with the word sales, and the reason why is because anytime I thought sales, I automatically thought about sitting in the car dealership for 6 hours.
That's the worst.
And it was an uncomfortable feeling.
Yeah, that's the worst.
And then knowing at that time my credit wasn't the best. So now they're sitting there trying to haggle me for 6 hours, and it was very uncomfortable. So I associated that with sales.
With all types of sales.
Correct. With all, put all the sales into one.
If you have a product or a service, you're gonna haggle me, right?
Correct.
You're gonna try to one up me somehow.
Correct. And then another reason why I think trust is lack of information.
Sure.
See, remember, we'll go back to what I said earlier, that our education system teaches us to think, act, and feel a certain way towards things we're not educated on, and then we hear the word life insurance. And we think death. If I say life, why the hell do you think death?
Yeah.
If I say milk, do you think water?
True.
You see what I'm saying?
That's very true. Yeah.
So it's just a lack of knowledge that's not being passed down. And the government is not incentivized to educate anybody on the true power of life insurance. Life insurance is called life insurance because it's for the living, not for the dying. Yeah. We have death insurance, and that's called final expense and burial coverage. Imagine this. You think your death benefit or only transfer to your beneficiaries when you pass away. Imagine if I told you, Mark, if you had a $500,000 death benefit, but you had living benefits, you had a heart attack, stroke, cancer, long-term care, terminal illness, you could use that death benefit while you're still alive. That way your family is not succumbing to any financial pressure. See, if the person is properly educated, now they find value in the life insurance, they're going to build trust in the product that is going to truly indeed help their family.
Sure.
But the times of social media, there's all this different misinformation. So they're getting fed over here, and they don't know, they're overwhelmed with information.
Yeah.
He said, she said, they said, and they don't know what to believe.
They don't know who to trust.
Correct. Yeah. So I think that actually brings the trust level down, because back in the 70s and 80s, the life insurance, that was your insurance guy, your insurance woman knocking on your door. You got a fruitcake.
Everybody knew that one person in their neighborhood, right? The neighborhood had one insurance guy who walked through every single neighborhood, and you would gain that trust with them. And now, how many life insurance agents do we have in the industry right now?
That's it.
We had a lot more in the 70s. It took a big decrease over the years.
Because so that's the good time. I'm glad you said that. So we had 500,000 active licensed life insurance in the mid-70s.
Yeah.
But what happened in the 70s to 80s?
Retirement, or they probably
the baby boomer generation.
Baby boomer. We had a lot more people.
Yeah. What happened was these baby boomers are now 30 and 40 years old. They're having kids, good jobs. They wanted to become homeowners. This is when the real estate industry experienced a birth, and people moved from the life insurance industry to the real estate industry.
Real estate agents and brokers.
To capture that boom.
Got it, yeah.
In that industry. Yeah. But now, here's the craziest thing. Now, between now and the year 2040, there's 10,900 baby boomers retiring every single day.
Wow.
There's something great. You want to tell them about the great wealth transfer?
Yeah.
Let's take it like this is if you truly believe that timing has a lot to do with success of a business and organization and the industry, I want you guys to listen up and write this down and let me know your thoughts in the comments.
Do you have the actual figure? What's the figure?
It's $64
trillion is being transferred from one generation to the next generation. The baby boomers, which are our parents, our older siblings, to the millennials over the course of the next year, a couple of years.
20 years.
Yeah,
over the next 20 years.
Yeah.
So guys, I just want to say, like, listen, if you're in a career right now where you're feeling overworked and underpaid, and you have that feeling we were talking about earlier that, hey, there's something inside of me that says, listen, I want more, I want to do more, I want to become somebody in this world, I just don't know what it is. I would highly encourage you guys to look at the life insurance industry, which is the wealthiest industry in the world. And if they Google what?
Yep, you Google what industry creates the most millionaires, you're going to find Forbes has a couple articles out that says the financial services industry, and life insurance falls in the financial services industry.
And the financial services industry is $140 trillion per year. Guess what's even more interesting than that? Life insurance makes up $63 trillion of the $140 trillion. So life insurance is the #1 industry most likely to make you a millionaire, and nobody's talking about it.
Nobody's talking about
Nobody's talking about it.
People are thinking it's boring, it's outdated, Caucasian-driven, 60-year-old, suit and tie, briefcase, knocking on doors. Well, we've proved them wrong.
Absolutely love what we're doing. We're that beacon of hope for a better tomorrow. So if you're looking for an opportunity, guys, just connect with us on social media somehow. Comment below. We'll get you further educated. But I believe that's a wrap for today's show.
But stay tuned to the Legacy Syndicate podcast, because we're going to be covering that stuff, as well as giving you life-changing information to level up and be a better person. So with that being said, I appreciate your time, man. We'll talk to you later. Take it easy, guys.